Investing in Forex. For beginners. Welcome to Be a Baby Billionaire. Forex trading, also known as the foreign exchange market, represents a dynamic and continuously evolving realm where currencies are traded to leverage exchange rate disparities. Unlike conventional stock markets, Forex operates globally as a decentralized marketplace, devoid of a central exchange, providing traders with uninterrupted opportunities across time zones. Its appeal lies in accessibility and profit potential, drawing a diverse spectrum of participants from institutional entities and banks to individual retail traders. Navigating this market demands a comprehensive grasp of its intricacies, encompassing currency pair dynamics, speculative and hedging strategies, and the pivotal role of risk management. Beyond technical analysis, success in Forex hinges on emotional discipline, ongoing learning, and strategic acumen. As traders embark on their Forex journey, they must arm themselves with the requisite knowledge and tools to navigate this dynamic landscape effectively. 1. Understanding the basics. Foreign exchange, Forex trading, involves the dynamic process of buying and selling currencies to capitalize on exchange rate differences. It operates as a decentralized global market, devoid of a central exchange, thereby facilitating continuous trading opportunities around the clock. Making it a 24-hour market accessible to traders worldwide, operates as a decentralized global market, devoid of a central exchange, thereby facilitating continuous trading opportunities around the clock, making it a 24-hour market accessible to traders worldwide. Traders utilize technical and fundamental analysis techniques to anticipate these fluctuations and make informed trading decisions. Additionally, risk management strategies are crucial to mitigate potential losses and preserve capital in the face of market uncertainties. 2. Participants in the Forex market. The Forex market comprises a diverse array of participants, ranging from large institutions and banks to individual retail investors. This diverse participation contributes to the market's robust liquidity and accessibility, ensuring ample opportunities for traders to enter and exit positions with ease. The collective actions of these participants influence currency price movements, shaping the dynamic nature of the Forex market. Institutional investors and banks often dominate the Forex market, executing large volume trades that can significantly impact currency prices. Retail traders, on the other hand, contribute to market liquidity and add depth to the trading environment. Their presence democratizes the Forex market, allowing individuals to participate in currency trading with relatively low capital requirements. 3. Currency pair values. At the core of Forex trading lies the concept of currency pairs, wherein traders aim to profit from changes in the exchange rates between two currencies. These currency pairs are traded against each other, with traders speculating on the relative strength or weakness of one currency against another. Understanding the dynamics of currency pair values is essential for devising effective trading strategies and navigating the complexities of the Forex market. Currency pairs are categorized into major, minor, and exotic pairs based on their liquidity and trading volumes. Major pairs such as Euro-USD and GBP-USD represent currencies of major economies and typically exhibit high liquidity and tight spreads. Minor pairs consist of currencies from smaller economies and may exhibit wider spreads and lower trading volumes. Exotic pairs involve currencies from emerging or smaller economies and are characterized by higher volatility and less liquidity compared to major and minor pairs. Traders must consider these factors when selecting currency pairs to trade and adapt their strategies accordingly. 4. Speculation and hedging. In addition to serving as a platform for speculative trading, the Forex market plays a crucial role in facilitating currency hedging activities. Businesses engaged in international trade utilize Forex trading to hedge against potential losses arising from currency fluctuations. By engaging in hedging transactions, businesses can mitigate the risks associated with adverse movements in exchange rates, thereby safeguarding their financial interests and ensuring stability in cross-border transactions. Speculative trading involves taking positions in the Forex market to profit from anticipated currency movements. While speculative trading offers opportunities for profit generation, it also involves inherent risks, including market volatility and unexpected developments. Traders must employ risk management strategies to protect against potential losses and preserve capital in the face of adverse market conditions. 5. Learning about the market. Embarking on a Forex trading journey necessitates acquiring in-depth knowledge about the market's intricacies, including factors influencing currency movements, trading methodologies, and risk management strategies. Continuous learning and staying abreast of market developments are imperative for success in the dynamic world of Forex trading. Traders can access a wealth of educational resources, including online courses, webinars, and trading forums, to enhance their understanding of Forex markets. Additionally, practicing with demo accounts allows traders to hone their skills and test trading strategies in a risk-free environment before transitioning to live trading. Developing a comprehensive understanding of market dynamics empowers traders to make informed decisions and adapt to changing market conditions effectively. 6. Setting up a brokerage account. Opening a brokerage account serves as the gateway to the Forex market, providing traders with access to trading platforms, analytical tools, and execution services. Choosing a reputable brokerage firm is paramount, ensuring a seamless trading experience and access to competitive pricing and trading conditions. Traders should consider factors such as regulatory compliance, trading costs, customer support, and available trading instruments when selecting a brokerage firm. Additionally, evaluating the reliability and performance of trading platforms offered by brokers is essential for executing trades efficiently and accessing real-time market data. By partnering with a trusted broker, traders can navigate the Forex market with confidence and focus on implementing their trading strategies effectively. 7. Acquiring specialized knowledge. Forex trading demands a nuanced understanding of market dynamics and specialized terminology such as leverage, pips, and currency pairs. Building a solid foundation of knowledge empowers traders to make informed decisions and navigate the complexities of the Forex market with confidence. Traders should familiarize themselves with fundamental concepts such as supply and demand dynamics, technical analysis techniques, and risk management principles. Continuous learning and staying updated on market developments enable traders to adapt to changing market conditions and refine their trading approaches over time. 8. Formulating a trading strategy. A well-defined trading strategy serves as a blueprint for achieving trading objectives and managing risk effectively. By outlining clear entry and exit criteria, risk management parameters, and performance metrics, traders can execute trades with discipline and consistency, enhancing their chances of long-term success. Traders can choose from a variety of trading strategies, including trend following, range trading, and breakout trading, depending on their risk tolerance and trading preferences. Additionally, incorporating technical indicators such as moving averages, oscillators, and chart patterns can help traders identify potential trade opportunities and confirm trading signals. By adhering to a well-defined trading strategy and maintaining discipline, traders can mitigate emotional biases and improve their overall trading outcomes. 9. Managing emotions, embracing emotional discipline. Emotional discipline is paramount in Forex trading, as it enables traders to maintain composure amidst market fluctuations and adhere to their predefined trading strategies. Cultivating emotional resilience and exercising self-control is essential for making rational decisions and avoiding impulsive actions driven by fear or greed. Traders often face psychological challenges such as fear of missing out, FOMO, anxiety over potential losses, and euphoria after profitable trades, which can cloud judgment and lead to poor decision-making. Implementing mindfulness techniques, maintaining realistic expectations, and practicing patience can help traders manage their emotions effectively and maintain a balanced mindset during trading. 10. Navigating market dynamics. Understanding the impact of global events. Global economic events, geopolitical developments, and central bank policies exert a significant influence on currency values in the Forex market. Traders must stay attuned to these external factors and assess their potential impact on currency movements to make informed trading decisions. By staying informed about global events and their implications for currency markets, traders can anticipate potential market moves and adjust their trading strategies accordingly. 11. Leveraging market liquidity. The Forex market's high liquidity ensures that traders can execute trades swiftly and efficiently, with minimal slippage in prices. This liquidity facilitates seamless market entry and exit, enabling traders to capitalize on trading opportunities with precision and agility. Liquidity in the Forex market is primarily driven by the participation of institutional investors. Additionally, high liquidity ensures price transparency and reduces the risk of order execution delays, allowing traders to execute trades at desired price levels consistently. 12. Prioritizing risk management. Effective risk management is essential for safeguarding capital and preserving trading longevity in the Forex market. Implementing risk mitigation strategies such as setting stop-loss orders, diversifying trading positions, and adhering to predetermined risk-reward ratios can help mitigate potential losses and protect against adverse market conditions. Traders should define their risk tolerance levels, consistently reviewing and adjusting risk management strategies based on evolving market conditions and performance metrics is essential for optimizing risk-return profiles and achieving long-term trading success. 13. Assessing the role of leverage. While leverage can amplify potential profits in Forex trading, it also magnifies the risk of losses. Traders must exercise prudence when utilizing leverage, ensuring that they maintain adequate capital buffers and employ appropriate risk management measures to mitigate the inherent risks associated with leveraged trading. Leverage allows traders to control larger positions with a smaller amount of capital, thereby increasing profit potential. However, leverage also amplifies both gains and losses, making it essential for traders to use leverage judiciously and consider its impact on risk exposure. In conclusion, Forex trading offers lucrative opportunities for profit generation, but requires a cautious and disciplined approach. Traders must prioritize continuous learning, employ effective risk management strategies, and exercise emotional discipline to navigate the complexities of the Forex market successfully. By proceeding with caution and managing risks effectively, traders can enhance their chances of long-term success and profitability in the dynamic world of Forex trading. Additionally, maintaining realistic expectations and embracing a growth mindset can help traders adapt to changing market conditions and continuously improve their trading skills. Time for the soft question. Getting your feet wet is the first step in putting to use what we have learned. Would you consider Forex to be your investment forte and why? Please share your experiences in the comment section below. This will help everyone learn and grow together. Subscribe with us and learn. If you find the information in this video valuable, please subscribe and share it with family and friends. Your support will help us create many more high-quality videos like this. Please support us. Please hit the like button and the notification bell to be notified. Click on these 2 videos shown here to explore even more. The contents of this video are for educational and informational purposes only. Thank you for watching.